All right. So today I have Ron with Cross Country Mortgage. I have a few questions that have reached out really since kind of late November. So I wanted to get it kind of straight from the lender's mouth and see what your thoughts on some of these questions were. So
Sure.
thank you for coming in today.
Thank
Very,
you for having me. I'm honored. Thank you so much for reaching out. I love to share knowledge, and hopefully, after this, we can get a little bit more insight about the lending side of things
Mhm.
to be able to understand more. So, yeah.
Absolutely. All right, so let's kick it off with one of the bigger questions I have gotten. There's been a lot of conversation and hearsay about ARM products, who they're good for, given like the higher rates lately. Mainly earlier in December, I've had a few clients come in asking me, just having interest in it, but also some that are concerned with just the thought of an ARM product, especially clients that are familiar with like the 2007, 2008 market. So, what are your thoughts on ARM products? Who are they good for, and when would you use them?
And that's a great question, and a question actually that comes up a lot, given the fact that interest rates are at a higher mark than they've been, or what we've seen previously in those anomaly years of 2020 and 2021, which obviously will never come back again. I think we can all kind of confirm that. The biggest thing about ARM products, and I love them, and I will tell you a quick story. I actually sold my parents an ARM product when they moved into their home in Pennsylvania about 15 years ago. And still to this day, my parents are in that ARM loan because the factors that created your interest rate
Mhm.
after your fixed period of either 3, 5, or 7 years, which ARMs technically are geared towards a 3, 5, or 7 year fixed period. The two things that created their interest rate after that were very small and very minor. And after it hit the adjustment period, their interest rate went down. So my parents are still in a position of keeping an adjustable rate mortgage, and their rate is still lower than what the market bears right now. So I like telling that story because it's very true and they love it. And it's one story about ARMs that I love. Now, the biggest factor of who an ARM loan, in my opinion, is good for after being in this business for 20 years are the people who have short term goals. Okay.
Mhm.
To way to combat higher interest rates is to take some sort of adjustable rate loan, which offers a very low introductory rate for either 3, 5, or 7 years. They're great. If your goal is a starter home and you don't see yourself being in that house for very long, an ARM is definitely something to consider. Now, we're in a very off period for ARMs being popular for one of the biggest reasons, and I think it's something that everybody in the mortgage business can relate to, is inflation. That is what caused interest rates to rise. They have to combat interest rates by, raising rates. The Fed has to raise rates, and they did their last adjustment in December of 2022. And we are now where that curve has kind of hit its plateau and it's on the downward mark. So, what that creates in this market, and a weird time to be in for mortgage rates, is where banks know without a doubt that a refinance boom is coming.
Mhm.
They know that everyone who took a high rate in the last 12 months are without a doubt going to have the opportunity to refinance. So, in the end, a bank's goal of lending money is to make money. And the way they make money is by charging an interest rate to do so. But in a bank's eyes currently, they know that a refinance boom is coming. So there really is no benefit right now for them to offer adjustable rate mortgages because any client who takes let's say a 5.5 on a 3 year ARM product will refinance when rates hit the upper fours or lower fives on a 30-year fixed loan down the road. We're in a different time frame than we were in 2007, 2008, where ARM products were phenomenal. I sold a ton of those loans. They were great products. My parents, for example, they created them because we were in a different time than we are right now.
Mhm.
So, to be truthfully honest, I think adjustable rate loans are for individuals who have particular short term goals of maybe selling, but the banks aren't pricing those loans to be attractive right now. So, we're in a very weird time for rates where it doesn't make sense for a bank to issue adjustable rate loans that are attractive because they just know people are going to get out of them. So again, we're in this weird time. I love ARM rapes, as I mentioned previously with my parents' loan, but it is a weird time for adjustable rates, and banks just know they're not going to make any money when somebody refis. So why make them attractive to drive more people towards those type of products?
Got it. Yep. And that makes total sense. And, like I've tried to explain, someone with a short-term goal of refining ultimately would be the ideal situation for that
Sure.
client.